Okay, welcome to the Swing Trading with Cycles channel. We're going to do our update on the Dixie here, the dollar index. Really important asset. Just it dominates a lot of things because a lot of things are denominated in dollars, like oil, etc. So we'll start on the daily chart. We're going to really think about the 3-year cycle here in this video. That's what we're going to focus on, the 3-year cycle. So Friday was day 18, right? We talked about this in the previous videos. We have this like cluster of consolidation here, and now we've broken down. Now the question is this making a lower high? It looks like it is. That's the presumption because we assume we're moving into a weekly cycle low. And that is where that takes us to the weekly candle where we had this like this rally which created this lower wick here, which sets us up to open as an inside week next week, but on the lower end of the range. And last week was week 21, so next week we're opening as week 22. So pretty late in the weekly cycle because these things tend to be in the 20-week range, right? So it's a question of, are we setting ourselves up for like a weekly cycle low in the next couple weeks and then a little bit of a rally? That said, the weekly cycle could always rally for just a few weeks. Like, I mean, look at this really bearish example where we had literally just a 2-week rally. That following week, it looked like we were going to rally a little bit more, and then we just like failed, went red. But you could get an extreme situation like that, right? Where we get a low, a vicious bounce, and then a pullback. We know we have the FOMC meeting next week. That's going to be really important. That's going to be telling. That's going to move things. That's going to be a catalyst. And we have the next FOMC meeting in December, which will tell us a little bit more. So as we think about that, that's certainly going to kind of shape this weekly cycle decline that we're in. And again, it started since week 17, which was the week of September 26th, right? So over a month ago, we've been kind of in this, like, because this right here is a lower high. I hope, like, that is clear, right? So, like, we came up. We made this lower low. We made this low. We made this, right? Like, that's what we just did, right? So it's now a question of, do we, right? Because this is a lower low. This is a lower high than this, right? And now we kind of actually held. I mean, we did make a lower low, just a slight lower low. So it's a question of, do we do something like that? Oh, I guess we can't. Like, you know, like we come back up here, right? Like, are we able to get back above that high is really the question. So that's the weekly chart. Most importantly, though, is the monthly. Now, the 3-year cycle, super important to understand. Generally speaking, asset classes are going to have long-term cycles. And in this case, we're looking at a 3-year cycle. So that's 36 months, easy math. You can see the previous 3-year cycle lasted exactly 35 months. It bottomed on January 2021, right? And so we've been rallying since January 2021. We had a high last month, right? So that's September. The September candle had a high at 114.778. That is our high for the 3-year cycle so far. Now the question becomes, is this going to be the high for the 3-year cycle? Is this going to be the high for the 3-year US Dollar Index cycle? That's the big question, and people are going to be screaming that from the rooftops, and they've been screaming that from the rooftops on every weekly cycle decline. Every little, like, look at this is a monthly chart, right? Look at these little red months, right? Each of these little red months, people were screaming, oh my God, it's over. Especially this one. Oh my God, we're going much lower. This was a really hard, I mean, even this month, which was ended green, that's a tough month to stay long. I mean, look, this is a big pullback. But then look what happened the next month. Like this, like really big follow through, right? That said, it could be over. Could be that we got our top for the 3-year cycle on month 20. But it's also very possible that we're going to consolidate here a little bit and then we're going to move higher, kind of like this, right? And so you think about this weekly cycle or this monthly cycle, or excuse me, This 3-year cycle that lasted 35 months, it had a top on month 25, right? This really long one that lasted 45 months had a top on month 32. This one that lasted exactly 36 months had a top on 27, right? Like, now that at the same time, this one that lasted 38 months actually had a top on month 12. We had a double top kind of situation, but this was a lower high. This is probably like month 26, 27. All that to say, month 20 is really early to get a high, especially in the case where you have this like bullish move here. So the idea that last month was the high seems unlikely. It's possible. I'm not saying it's not possible. And most importantly, you know your levels, right? You have a big candle that has a big upper wick, and that leaves you with a range of 114.778 to 107.68, right? Like, that's a really wide range, obviously, right? It's like literally a $7 range on a currency. It's just like about 7%, a little bit less than 7% on the world reserve currency. That's obviously a huge range that we can kind of oscillate within for literally the next several months, because we wouldn't expect the next 3-year cycle low until around January 2024, right? So a whole other year, right? And so it's a question of, are we going to get some kind of sideways to ugly action and this uptrend is kind of over? Or are we going to get a plunge and we're going to start the 3-year cycle decline? Because at some point we are going to get the 3-year cycle decline. That's important. And that probably will mean breaking below the 50-month moving average as it has in these previous ones. Like, you can see that one and that one. That one just kind of kissed it. This one kind of lived below it. And obviously you had this really bearish phase. But the idea, though, as my expectation is that we would have, like, this is going to keep moving higher because that's what it's doing right now, right? And this is going to kind of give this thing time to catch up. So, like, maybe it kind of catches it, like, right here or something like that. But at some point, we're going to get a precipitous decline. The question is that what's starting right now? Because when people say there's a top, it's a top, it's the top, you have to ask them that question. What time frame? Are you saying it's the 3-year cycle top? Right? Are you saying it's the long-term cycle top, or is it just a local cycle top, like a little weekly cycle top? Like, those details are important. And so, like, the levels are so clear, but more importantly, we actually have a game inside a game, right? Like, this is where it gets really interesting, right? Because of the shape of this candle, right, for this October, we're going to open as an inside candle inside the range of October, right? And obviously October is inside the range of September. So we have this game inside a game. We need to get outside of the range of October first. And October has a range of 113.942 down to 109.535. So that's like, what is that? Call it $4.50. So a little bit of a smaller range than that, or quite a bit of a smaller range than the $7 range on the monthly. And the interesting thing about that is, if you break either side of the range, you have a better sense of, like, the idea that you're probably going to at least test the other end of that, of the monthly end of the range, if you will. So that's a good risk reward, right? Especially, like, if you break below this 109.535 level, then very likely you're gonna kind of test the 108 area. So that gives you some nice downside target. The upside isn't as favorable in terms of the risk reward, but either way, it gives you something to look at, data driven, avoid the emotion, use the math. Are we making a higher high, or are we making a lower low? Right now, we're not doing either. We're just consolidating. And until that changes, there's no reason to get overly bullish or overly bearish. What you can say is that this uptrend right now has paused, right? It's going to be a question of how does it resolve. And just in terms of things that are correlated, we'll look at TLT for a second. So monthly chart on TLT, right? Like, just massive downside on this thing. It's month 19 of a longer term cycle, and you can see this big lower wick forming, which is a rally on the lower time frames. And speaking of that, we'll look at this daily chart. You can see we had this gap up and then 3 days of higher, like basically 3 days. Well, this is another gap up. I guess this was a gap up probably a little bit. But then Friday we have a little bit of a pause. But notice again, just kind of in keeping with that theme, this is actually just an inside candle, right? Inside the range from Thursday, right? We stayed totally inside that range and really just a doji. Not a whole lot happened. So now it's going to be a question of, do we get outside of the range of that candle from Friday and then the daily candle from there? Like it looks like what we're setting up here is a little lower high, or excuse me, a higher low. So like we've started a little uptrend on the daily chart, which is to say, this is a little daily cycle low right here, probably right there. And so that would put us, Friday was day 4, so Monday would be day 5. Now these little rallies have gotten snuffed out really quickly. You can see all these little ones. And so it's going to be a question of, has something changed? If we look at the weekly chart, we had this little rally the week 7, and then, this is week 18 that we're trying to put a little reversal in. And you can see we made a lower low. That's your false breakdown. And so now it's a question of, do we get that little follow through and this becomes a swing low? And is this a weekly cycle low? But again, are we going to get a little short-term rally and then another dump lower? That's what we got to be on guard for. I mean, just the like slope of this is just insane, is what I can say, right? And we'll just finally look at LQD, because we know LQD had been actually below the COVID low. Yep, it still is. Right? That's your COVID low. And this is where LQD is. And LQD is our corporate grade, investment grade corporate debt. And you can see we actually just made a swing low. That's important to know about. So that's probably a weekly cycle low right there, right? And if you think about the count, right, this is basically the exact same count as TLT actually. Right, so low. So that's going to be interesting. And in terms of dividend, yeah, so this is a 3% dividend. Now, this thing, wow, is down, right, basically comparable to TLT, down like 30%. Something kind of unthinkable. You wouldn't have thought that would have happened. This is your 200-week moving average. Look how far below that we are. That's all the way up at 126. We're down here at 109. So like, 24, 25% higher from there. Man, just a bloodbath, which means at some point things are going to spring back and there's going to be an incredible buying opportunity. And we're going to be screaming that from the rooftops here on this channel, helping folks kind of navigate through that. So definitely stay tuned. If you haven't subscribed, please do hit the bell to get the notifications, because I do put the videos out on a timely fashion, like as important things kind of happen. And certainly, definitely follow on Twitter if you're not already. Take a look at the link in the description or the channel page, because I can't post videos all the time, but I definitely try to tweet when important things are kind of unfolding. So that's all we've got for this update, again, on Dixie, and really just kind of like the credit bond markets in general. Not looking super healthy is the general general kind of consensus. But again, at some point, incredible buying opportunity setting up.